Hello and welcome to this recording where I take you through the step-by-step process to set up your financial planning account with Finomenon Investments. My name is Shabrish Menon. I'm the principal and founder of Finomenon Investments. Uh, the reason I'm creating this brief recording is because each time I onboard or sign up a client, there are many questions around the complexity of providing the information, supplying the data, which eventually helps us to create the plan. This recording would help you understand that process, and we'll take you through that in the next 10 minutes. So let's get started. So by now, you would have finished signing the agreement and you would have received a link which says sign up to begin your onboarding. I'm going to share the process from there. And once you have created your account, you can log in using the credentials. And you would land on your main page, which shows you the first profile card for family. In this profile section, you can create your family structure in terms of the key people and the dependents. So here, as an example, you can see I have me, I have a co-client. This could be your wife or spouse or partner, and then you can add additional children. By clicking on Add Participant, you can add additional child if you have 2 or 3 or whatever that number looks like. Once you have finished supplying the family information, you move to the next step of providing information about your risk profile. This is a critical piece of information which helps us to understand your risk profile and how your relationship with money is. There are 8 questions, and each of them provides you multiple choice of answers. You can select the most appropriate answer which resonates with you. Once you have completed the risk profile or the risk, you move to the income. Here, you would provide information about your income. If you're a business owner, that'll be your business income. If you are a salaried employee, that'll be your salary. And that is asking you your annual amount. So let's take a hypothetical number here of $250,000. In most cases, this income is something that you already receive. If you're expecting an income to start at a future date, you can choose a calendar year and set that date. You typically get an annual increase. You can take a best case assumption of what that averages out to be and put that number here. And then when that income typically ends. Usually for most people, it'll be at retirement. But if you have any other milestone where you believe that income is going to end, you can choose that by making that selection from this drop down. Once you have provided this information for yourself, and let's say for your spouse, you can then move on to add any additional income that you may have. This could be through your self-employment, or it could be a bonus, or any other source of income that you may have, including maybe rental income. Once you have provided this information, you can move to expenses category. Here, there are 2 tabs. First one is the living expenses. You would have received a cash flow worksheet that you can fill separately to make a tabulation of what your monthly expenses look like. We want to be as accurate as possible in this scenario. If you have peak periods within a year where your expenses typically shoot, such as Q4 or Q1, depending on your personal circumstances, you can average that out to streamline it at a monthly level. So you would put a average monthly expenses in this box. The system already calculates your, for your filing in terms of the state that you are a resident in, and you can here select how you file your taxes. So if that's, married filing separately or married filing jointly, you can choose any of these options. If there are no local taxes, such as in the case of Washington, you can leave this as 0. It's already calculating federal taxes at the back end. You can add any other expenses that you may have and then move on to the next step. Here, is the most important one in my opinion. In the savings tab, you basically will provide what your contribution is, not what your balances are. So here, for example, if you're maxing out your contribution in your 401k, you can select that. If you're making a percentage contribution of your salary, you can make that as your selection. Or if there is an annual dollar amount that you target each year to make the contribution, you can select that as well. So let's just assume that you make a max contribution. And if you're an Amazonian or a Microsoft or a Google or whichever employee you're with, they will typically match a certain percentage of it. If there is a match that your employer provides, you can input that here. And usually that match is capped at a certain level. So this reflects the maximum percentage of the client's salary that your employer will match. So assume that is 3%, and we put that here. And if you have a flat dollar match, which in some cases employers do provide, you can input that information over here. Once you finish providing that information, you can do the same for your spouse. Say that 7% of your income. And let's say that a 50% match in this case, and then you can save that. And if you're making any other savings on a monthly basis, you can add that in this box, or you can add others which you are contributing your savings into. So if you have a Roth IRA, for example, and you contribute to the annual limit, you can use it and add those additional details. Assume you have an HSA. Again, if you're maxing that out, and if you're getting a dollar match, you can add HSA. So this tab for savings is not for your existing balances. That is the key part to remember. This is only to record your contributions. Your balances will be what we capture in the next tab, which is in your net worth section. So here, as you can see, you have all the information that you are able to supply. So if you have any specific bank accounts, you can link that using the link account button. We pretty much have integration with all major banks, as you can see here. So for example, if you have a key bank, you can use key bank, and whatever information you have, you're able to provide that here. And as you submit it, those accounts will automatically get linked. If you don't have your passwords, or if you don't remember them for some reason, which will obviously be required for you to integrate them at the back end, you can then simply decide to add them manually. So what you can do is go to the bank and then add the account. Let's say this is Shabrish's Chase account. And then you can add the balance. The key thing to remember here is that if you add these manually, it will require manual refreshes as well, as opposed to linking them where it is automatically pulling the most latest balance from your respective account. Most clients prefer to connect their accounts because that's a one-time effort and they don't have to ever come back and manually update these numbers. But that's a choice that I leave to my client based on whatever it is that you prefer. Let's add XYZ's savings account. And so on and so forth. So you can add any number of banks that you want based on what your current situation is. Once you've added the bank information, we move next to credit cards. Again, here you are able to add the card information and whatever is the balance you owe on it. In most cases, I believe you may not be carrying balances, in which case you can leave that as zero. And then if you are making a monthly payment on that balance for some reason, you can use that drop down under the monthly payment and choose whether you pay it in full or you pay a minimum amount. If you don't know the APR, we can always use the 21% assumption. 21% APR is the national average in the US for all credit card providers. Moving on to investments, this is where you add your investment accounts. So, for example, going back to the 401k, if you have a 401k account on which you're making active contributions, you have already added that, remember, in the savings tab. What you do here instead is actually enter the current balance. So if you go to your 401k's latest statement from your plan provider, it'll show you your current balance. You don't need to choose the asset allocation if you believe you're not aware of it. But if your plan statement does show you what kind of an asset allocation it has, you can choose that from this asset allocation tab. If you don't fill this, no harm. You can do the same for your spouse or partner. And you can continue to add whatever investments you would like. So if you see the drop-down menu, you pretty much have everything listed here, from your Roth IRAs to 401ks to your traditional IRAs. So whatever kind of investment you have made and you hold, you can choose this from the drop-down menu and add it here. Once you're finished with the investments, we move to the stock plan. Many of my clients have significant part of their compensation paid out in the form of equity compensation. It is important to capture the value of it and the vesting schedule. So here, as an example, if you choose a stock plan account, you can choose whether that's a public and private stock. Assume that you are working for a company which is listed. You can choose the symbol here from this drop down, whatever that may be. So let's choose Google. And here you can choose what kind of returns that you typically align with. Most large companies will align with large growth, such as Google. So you can choose that. And then the vesting schedule. We have Google, Amazon, Microsoft, all vesting schedules already tabulated at the back end because they are typically standard for all employees. But if you have anything specific and unique to your circumstances, you can choose that from this drop-down menu. If you have any specific clauses or guidelines in terms of how the vesting happens at separation, you can choose them here. But if none, you can select none. If you don't have to pay any cash to exercise your grants, you can check the box cashless. And you don't have to opt in into any of these necessarily. These are things that we discuss in thorough detail at a later point in time. But you can select the most optimal option that reflects your scenario. So if you're exercising them as soon as they vest, you can keep this as a selection, and you can click on what the grant schedule looks like. So, if it's a public company, usually those are RSUs. Let's say you have 2,500 shares granted, and you can also put the right dates in terms of how the grant date schedule looks like. And you can add additional grants that you would have received on different dates. So this just allows you to basically capture all of the grants that you get periodically. Like Google has a refresher every month, Amazon has it every year, and so on and so forth. So whatever reflects your most accurate scenario, you can choose that here and then save. Because grants typically have future vesting dates, this is not going to show you any value, which is the right way to think about it. So if you see 0 here, don't let that number throw you off. This is basically capturing it accurately. Moving on to loans, you will have different kind of loans that you may want to add here. The most typical one is the mortgage. So you can call this a home loan. If it's with a particular company, let's say Senlar, you can add that here. If it's joint or individually owned, you can make that selection. And whatever was the origination amount, the origination year, whatever is the interest rate you're paying on it, and whatever is the loan term. So let's say you're making a $4,878 payment, and then you can also put the balance on the original amount. If you do plan to pay this off early, you're welcome to choose this from this drop-down menu in terms of what is the date that you're targeting or the year that you're targeting, or you can just leave this as it is. Again, you can add as many loans that you have. It allows you to pretty much add all types of loans here. So whether your mortgage is, adjustable, interest only, home equity, or a HELOC, whatever that is, you can make the selection here, including car loan and student loan. Once you're done with loan, you move to property. If you own or rent it, you can make the selection. And if you're a joint owner with your spouse or partner, which year you purchased it for, what the current value is, and then what kind of taxes you pay on it every year. And then you obviously would have some kind of insurance on it. And typically you will have an annual maintenance amount that you spend in its upkeep. The last tab here, or the second last one, is insurance. So in the insurance tab, you can add if you have insurance coverage from your employer, which is typically the group insurance. You can provide that if you're paying any premium for it. What kind of death benefit it provides you, if there is a cash value or not. And then if you have any kind of other insurance here, including term life, disability, whole life, auto, umbrella, or home. You can add all those insurances here. Once you're done with it, you have one more tab where you're able to add any other additional detail, such as, if you may own a business, which could be a partnership or an S corp, you can add that here as a lifestyle asset. It could be even a boat, or any kind of a note receivable from an entity. Any kind of an asset which doesn't qualify in other criterias, you can add them under this section. Once you're done with this, we move to the goals, which I believe is another very important section. Here, it automatically takes the retirement goal because we all have a goal to retire. You can always come back here and edit your retirement age. So I don't want to work till 67, which is the full retirement age in America. So I can change that here to 60 for me and my partner. It is already accounting for healthcare cost based on the national averages, so you don't need to change that. And then it is automatically taking the college education goal for the 2 children that I added. You're able to come here and change that. This is defaulting to a public 4-year in-state on-campus cost in today's dollar, and then naturally it'll account for inflation. But if you believe you want to change this to a private institution or an off-campus sort of a setup, you can make the selection from this drop-down. And if you also have a specific college in mind, you can look up that college. Let's say it's, Princeton. You can use that, and it is already taking in-state and out-of-state tuition amount. Once you have done with goals, by the way, feel free to add any other goal that you may have. These are only the default goals that the system automatically inputs, but you can add any number of goals that you feel you want to pursue. So it could be like buying a car or vacations or buying a new property. And a new property could be a vacation home, or you're wanting to relocate your primary home. It could be a new asset purchase. It could be a gift. Whatever that may be, you're able to add that. So let's just quickly add a vacation. And we can define that at this, specific age as, let's say every year I want to do a vacation. I can use that as guidance here. And then it already accounts for the general inflation. And you can put a target amount in terms of how much do you usually spend on a vacation. And this is at this frequency. So select every 1 year, 10,000 just as a sample. And then we move on to next. And finally, now you're here in your vault. This is a very important place for you to review your documents. Any kind of a documentation that is shared by your advisor is placed in your vault. So if you go to your plan recommendations, you will find all your financial plans. Any recommendations that are made to you, they will be stored here. If you go to document checklist, here you will find your document checklist in terms of all the documents that you're supposed to upload. And then, of course, you will have your invoices or your disclosure documents, which your advisor would share. Again, this is your vault and it's highly secured. So any kind of documentation that you would like to share with your advisor or your advisor needs to share with you, this is the place that you come and find them. By clicking on Add File, you can simply drag and drop those files into these respective folders. But it's fairly simple and easy. And once you have finished uploading your documents, you hit on Complete. And you get here into your profile section. As soon as you finish, completing all your information, the advisor automatically gets a trigger stating that the client has finished supplying all the information. And that is the time when I'm able to get into the account and then begin reviewing the information that you supplied. We always do a data checkpoint meeting where we formally sit with you either in person or a virtual meeting to go through and review each of these details. And the idea of that meeting is to reduce any errors and make sure that all the information that is supplied is as accurate as possible. There you go. So this is the most simplest way for you to provide your information and prepare for the plan development meeting. Thank you for watching.